video, I want to again discuss a chart from the Method Setups video, but do so as a concept scenario drawing, where we turn the bar chart into a line drawing in order to specifically focus on the core method related to the chart and trade setups. I have always liked these line drawings, or scenario drawings, as a way to facilitate visualization of what you should be looking for when you look at your trading charts. The better you are able to do this, the better your trading decisions will be, including being able to make these decisions real time. You are in essence teaching yourself to mentally checklist the chart instinctively instead of as a conscious process. This would be in contrast to hindsight chart studying, where you look at charts for all the winning swings and the initial reverse that started them as if this meant that there was a trade setup to enter. Also, while ignoring other swings that had the same virtual look, but that would not have given a winning trade. This approach is of no use in accurately learning method trading, and it certainly would do nothing to enhance real-time decision-making. If you want to study hindsight charts, you do so blacking out everything to the right of the initial reverse. Get in the habit of looking at charts for how they look real-time versus how they look after you know the result. Here is a review of this chart for the Method Setups. Then we will look at the same chart as a concept drawing. Red dot, PMD swing reverse, floor pivot failure breakout. Also note how this synced with the initial reverse channel versus a floor pivot break one only. Diagonal breakout potential that is more than partial width as continuation. If this trade is not done, then the yellow dot cannot be done. It is a counter momentum breakout chase that is viewed to be into a PMD and thus having higher odds of reversing instead of continuing. Green dot. Yellow circle initial reverse with diagonal breakout potential. However, it was an initial reverse only and it was into the floor pivot. I do not have the start point reject initial reverse with diagonal breakout potential that is continuation, which is a time that I am comfortable with trading initial reverses. With the trade being done into the floor pivot, I am not going to call this diagonal continuation. Yes, you could say room to the floor pivot and partial of through, but with the typical outcome to be a floor pivot reject and with no price to consider for a backstop, there was no trade that was considered, and I also did not exit the trailing sell at this point. Price went to the floor pivot, rejected to a higher low with MEX flow up, and then I did the green dot buy as a reverse out of the trailing short. The trade is a floor pivot failure with MEX flow, room to the previous PMD high, which is breakout potential, and with nothing in the way to a partial, I will call it continuation. A previous PMD is breakout potential, but it is also a potential double top if the PMD high was right side only, which this was. However, you do have room to the price, and you then have the floor pivot as a backstop while trying to get through. It is this combination of breakout potential, no price resistance until a partial, backstop that makes this continuation. Can you look at a chart like the left chart and immediately see the right drawing in your mind, where you know the key method checklist points that exist for whether you have a trade setup, with a failure setup, with continuation, essentially without thinking about it? And if you could do this, do you think your real-time decision making would be quicker and more accurate while you were focusing on the entry timing for when the setup, if there actually was one, could be entered? You won't be able to do this while allowing yourself to sell the yellow dot or doing any clear non-method trade and ignoring method. You won't be able to do this simply hindsight studying charts and assuming any profitable swing you can see also has an entry. You won't be able to do this without real-time practice, but instead of practicing, you continue to watch method setups go by without trying them. But you can learn to do this when the key real-time decision points on the left chart, the red dot, yellow circle, and green dot, all look like the right drawing, and the things that are known before those points, allowing you to fluidly make the decision at this point. In light of this, I am strongly recommending scenario and concept drawing visualization study. And when you do this, also be sure that you label your drawings. Don't just do the drawing. And if you want to do this the most effective way, make the drawings by hand instead of in a paint program. It is a known learning principle that any time that you can associate more senses to the learning task, the better your absorption of what you are trying to learn will be. There are a couple of important considerations for doing this exercise. Don't take a chart and try to redraw every little swing and move. Besides not being conceptually relevant, doing this also makes the drawing specific to the chart instead of what you are trying to learn better to visualize. Make your scenario drawings, those drawings where you are practicing drawings of method setups and concepts versus working with a given chart, accurate and realistic. Don't try to draw things that would be flawed for trading, like scenarios that don't really continually repeat and or aren't method accurate, both in terms of what the drawing is supposed to represent and the scale of the drawing. For instance, someone did a drawing that was supposed to represent reversing along a pivot line. If I look at the segment that was supposed to represent the trades and compare it to the segment that was supposed to represent the left side of this, I would be looking at consolidation that was 4 times bigger than the entry pattern. So consider, how could you possibly do a pivot trade back into consolidation that was that large, and a pivot reverse will never be considered a method trade setup. There is nothing realistic about the drawing, not for what was drawn to begin with, and not for method, which is supposed to be the whole point of doing the drawing to begin with. This makes this all counterproductive. When you do your drawing, do it based on how you should be chart reading for method and trading. Start with a left-right separation point where you are immediately visualizing all known left side information, the key information being the previous swing and is there a diagonal or was it a horizontal breakout. Key prices, extreme prices for targets and for what may be traded into, and relevant inside prices that may become a shift line. Previous start points like a PMD or triple top or bottom that would give additional breakout potential. Then go to the right side and determine, do I have a start point? Do I have a left-right price in the area of the initial reverse, or is it right side only? Do I have a failure entry? And what is the most important and already known, if you have chart read left-right, does my entry have continuation? Now we will start the drawing, and remember that we want the drawing to be a realistic representation of the chart and the key method components, but we are not trying to duplicate the chart with each up and down. We want the drawing to be continually useful as a concept scenario versus being specific to a chart. In this case, we have a common issue regarding trading at or into a floor number. I have separated the chart right after the area of the yellow dot. At that area we know that TTM was extreme and would be looking for a PMD low, so crossing the vertical line would be the PMD and a possible start point for a swing reverse. To the left is all the information that you would know to that point. We will be completing the drawing for the right side and the green dot buy, but the same thing could have been done for the red dot, again focusing on having to deal with the floor number. PMD high, move to the floor number, hit, and retrace to a lower high. Floor number failure breakout entry. Yes, a price can fail on a breakout with the initial reverse, it just isn't going to have MEX flow. Diagonal continuation, meaning that there is nothing in the way until the diagonal beginning, and that is more than partial width. You then know the red dot breakout goes to a TTM extreme and then retraces to a channel under the floor pivot, which tells you to be watching for a PMD low to occur, and thus the yellow dot can't be traded as a counter momentum, channel only reject, breakout chase into an anticipated PMD low. Should you be drawing any of that on your chart? I would answer that as definitely no, with the exception of TTMX noting the extreme. Anything else would be non-method, and we don't need non-method scenarios. So, as you cross the line, you can see what you would know as a simple drawing labeled for the key components and the kind of things that you want to immediately come to your mind when you look at the chart. You want to get to the point where you don't even think about it. Anticipated PMD low, diagonal breakout potential from the previous swing, additional breakout potential through the previous PMD high, with the next price to the yellow resistance, and you know that inside of the diagonal is the floor pivot, so you know you have diagonal breakout potential, but you don't know if you have continuation until you would know where the initial reverse would be. Now let's complete the right side of the drawing, where we will use the left side information and additionally decide if we get a trade setup that would have a failure entry and have continuation. The PMD did occur as anticipated, and becomes the start point for the initial reverse. A yellow circle should be marked there only, as there is no price there, as you know. It would have already been marked on the left side. You do have a PMD swing reverse initial reverse with diagonal breakout potential, which is a very discretionary setup and one that would not be considered without continuation. Do you have continuation? No, not on an initial reverse, only directly into the floor pivot, and like the reaction you should have when you see a TTM Extreme, you should be visualizing a reject and retrace at the floor pivot. Thus, with only 5 ticks of room to that point after a fill, there is no continuation, and no trade would be done on an initial reverse regardless that there was a start point and the diagonal breakout potential. Diagonal breakout potential is not continuation by definition. Write it down and say it 1,000 times, or whatever it takes to get this clear, just like you should be doing with counter momentum breakout chases only are not trade setups because they are visualized as being into a PMD. The initial reverse goes to the floor pivot and rejects, but it doesn't lead to a reverse, and instead there is a higher low with MEX flow continuing up. You may have hesitated at the red dot sell, but for the buy, you absolutely have a clear floor pivot failure setup. You have a floor pivot failure breakout with MEX flow. You have your failure entry, which is late basis the initial reverse, and this should be recognized because that is the optimal entry location, and the further away you are from this, the further the entire swing has to go to be profitable. Continuation is always your most important consideration, but in the case of what is a continuation setup, when compared to the initial reverse, it is additionally important. Consider the floor pivot and what is above it in terms of where your partial could be taken, remainder of the left side diagonal breakout potential, next price is the yellow line resistance, but the PMD high, which is also additional breakout potential, is also a possible double top. You have 6 ticks of room to that price. You have the floor pivot as a backstop to hold the trade, and I can get my 10 ticks well before resistance. Yes, the trade does have continuation. The drawing is completed with all the key method concepts labeled, and with that you have a method scenario drawing directly related to trading the floor pivot, and you have gone through a visualization exercise that you can continue to do to help absorb the concepts and what you want to see when you look at a chart, key aspects for trading versus a bunch of bars that by themselves don't say much of anything.